What's up, everybody? How you doing? You're watching the Daily Stock Market Brief. This is the weekly recap episode. Today's episode is going to be shorter than usual. I really want to just walk you through some things that I'm seeing in the markets. I've been getting a lot of comments like this, you're this, you're that, you're bullish, you're bearish, boo da bada bing da bada boom da bada bing. But let me just tell you this, we got to look at the bullish perspective and bearish perspective at all times so you can come to a conclusion for yourself. This isn't about predicting, it's about preparing yourself for something good to happen and or something bad to happen. We got a lot to talk about, but I want to keep it quick, keep it to the point, people, okay? Keep it to the point. Let's get into today's episode. All right, welcome back. We're going to start here at the market dashboard. This is the weekly time frame. We're looking at the weekly performance of, the 11 sectors here. You can see energy took the biggest hit. Now, we've been looking from a relative standpoint. It's been weakening. We'll get into that shortly. Now, up at the top there, we got utilities. Okay, utilities is a defensive play. Starting to see strength for the week. We only had 5 sectors in the green. All right, now what I find interesting here is technology made itself into the green, and we're going to be talking a little bit more about that right now. What hold technology up? Well, let's look at the industries within technology, and look at this, renewable energy. What's going on with that? And then semiconductors. So we've been seeing some strength in semis and renewable energy. And then I'm like, okay, let's dig a little bit deeper into this energy thing, this renewable energy and the semis. I pulled up iShare Global Clean Energy ETF. And then also you can look up ticker symbol TAN. That's another one that would fall within this category. And look at this thing. It's taken a huge fall from $34. I think TAN is even down around 40% from its peak. So we're talking monster moves to the downside, but now they're starting to pick up here. You can see the RSI, positive divergence, price percent oscillator, positive divergence, bullish crossover. We're about to break out here, it looks like. This could be a fake out. But we got above the 5-period moving average, the 10-period moving average. We're right at the 20-period moving average. This could be the start of a rotation back in, and you might start seeing some strength in these type of names. I don't know, but that's what I'm seeing. Now let's look even deeper here. We're looking at a relative rotation graph. These little worms on the screen right here, are moving into categories, okay? Improving, leading, weakening, lagging. The longer the worm, okay, the longer it is, the more powerful of the move. Energy, it is it is quickly moving from leading to weakening on a 5-week tail basis here. But what we've been paying attention to was these little guys hanging out over here, XLU, XLP defensive plays. When you rotate into that, it's not always a great sign. I mean, it's not a bad sign per se, but last time we were we were rotating from this area, it was during this market chop here. And then I also want to pay attention to industrials and materials. They have been playing out well for us, but we do see them turning around. Now let's dig a little bit deeper. Now if we look at the DJA, this is the Dow Jones Composite, and we look at what makes that up: utilities, industrials, and transports. Look at that tail on utilities. That's a 5-week tail. Talk about significantly improving. That to me is just saying like, okay, maybe we have this rotation still taking place, a little, from risk on to risk off until maybe things settle here. And then you pull up the XLU chart on the weekly time frame, we're flagging right below a massive area of resistance. If this thing takes off, we're going to be moving this into the leading category because it'd break through that resistance and it would head higher. Now, and you look at gold, okay, now gold is breaking out of a period of long-term consolidation. Price percent oscillator turned up, it's bullish, but there is a caveat here that I feel like it's getting a little bit ahead of itself, but it's not been confirmed. So it could just be nervousness that I'm feeling, but I do want to point out that on the weekly time frame, we disconnected from the 5 EMA, and typically when we get disconnects like this, on a weekly time frame especially, we get reconnects. So I wouldn't be surprised to see gold take a little bit of a breather here because I think it's getting ahead of itself, and that means miners might take a little bit of breather too. All right, now let's put this on to some more risk-off type assets. All right, let's look at the TLH bonds, flight to safety. Not really. Jeez. This looks to me like a bottoming pattern. We had the price percent oscillator also curling up here, still below zero in a bearish trend. Things could change quick. You can see the RSI trying to pull itself up here, but this is the start of a bottoming pattern. If we get above 144, 145, that's probably where the 100-day moving average is going to be. I mean, perhaps we break out, and that is that risk kind of off type move that we might see. And then let's play another scenario out. These are just scenarios, things that I'm seeing, right? This is just, like I said, not predictions. I'm just pointing things out that I'm noticing. And, sometimes it's really important to pay attention to this stuff. Other times, it doesn't really matter. So the dollar in May typically is strong. Typically, from a seasonality perspective, it's been very weak. We've been seeing some just back and forth these last 4 trading days, trying to either get the bears take control of the yearly open, which is that gray dash line, or the bulls, fight back and make above it. The only case from the bullish perspective on the dollar, which could be bearish for other assets, is this could be very well a falling wedge. Falling wedges are bullish. That would shoot us up potentially all the way to 91.50. And I matched this in with kind of a similar type wedge. This might be reaching just a little bit here, to be honest, but you can see this red dash line when the dollar headed down. You can see this red dash line right here moving through to the S&P 500. We broke out and we started moving up. So when the dollar goes down, S&P 500 goes up. So if this is a rising wedge, which would be a bearish technical pattern, we broke down and we kind of coming up to back test. So what would the scenario look like if this was actually true, if the dollar broke out to 91.50 in some strong movement? Well, that means I would expect, well, first off, I think the dollar can still potentially reach, not the dollar, the S&P 500 might reach higher, right? 4,200, 4,250, maybe. Try to reach that previous resistance. We'll see. It might not. But if it continues to head lower, that probably put us, and if we break this little low right here around 4,100, 4,050, I think that sets us up for a stronger move down into June, and then we get a summer rally and rally higher. That would be the scenario in my head, because if the dollar broke out to 91.50 and then started heading lower, which I ultimately think that the dollar is it's just going to go into oblivion. I mean, you can't, can't print as much dollars into the world and just not lose value. It's going to happen, right? At some point, we might see a huge spike, but at some point, the dollar will continue to lose value. Rising wedge, like I said, potentially break down into June. So that would be the bearish case if this does break out. Down into June, and then I think we have quite a bit of support here at 4,000, just below that too as well, which puts us on the daily 100 period moving average, I believe, for the S&P 500, which we'll get into. And then we might see just the strongest summer rally, and we continue to run. So now a couple other things that I want to point out, weekly time frame on multiple different indices. We pointed this chart out multiple times. We look at the VXX down here. You had a rising wedge, falling wedge, rising wedge, falling wedge, rising, falling. And every time this, which is the volatility, breaks out, the fear, right? The fear increases and we see the move down. You can see we're hanging on right now by a fingernail. We can, the bears had control this week, and then the bulls immediately took it back as soon as they hit this trend line. And we're dabbling right around there at a very high RSI reading, just like the previous times this happened. So, if we all of a sudden get this fear spike, that can take us right back down to potentially just back test this trend line again. And that puts us right around that 3,900 level to maybe 4,000. So, even if we come down, that would be a healthy move to the downside. And then, like I said, potentially set up for a stronger rally. But that's not the only volatility index that I kind of want to take a look at. If you look at the IWM, the same thing goes. We had the falling wedge, we broke out. The falling wedge, we broke out. You had a rising wedge, rising wedge. Now we don't really have a rising wedge right here, but we do have a symmetrical triangle, and you can see, come on, look at all these wicks, these long wicks. It's like they fall down, they get right back up, fall down, get right back up. The dips are getting bought, but it's being tested severely over and over again. There might come a time that if that breaks, they're gonna just be like, all right, it is what it is. Let's get out. And then all of a sudden you have a bunch of trap supply up here, but it hasn't been broken yet. So the bulls are still in control technically, but from the weekly 5 EMA, we are below that. So the bears have control of that. And notice another thing. We're floating around here at, all-time highs in a sideways chop, right? And we have the volatility, the RVX down here, the Russell 2000, right? Volatility index here. And this doesn't really quite match up when you think about it. This should be lower, right? Like, so during this monster run up, we still haven't reduced, I guess you can say, the fear. Like, we're still floating up pretty high relative to where we were previously. I would expect this to be lower, at these all-time highs. That's, it's just something to point out. And then the same thing goes with the Qs. All-time highs. I did draw out a rising wedge here now because we talked about that on the previous episode. Slight negative divergence, kind of reaching there. But you had that falling wedge. We broke out. Then you came down, falling wedge, rising wedge, broke down. Same thing going on right here. If we crack through that, and you can see how many times it's been tested. If we crack through it, it doesn't necessarily mean we're just going to crash down and fall through the roof, but we could potentially break down lower if that happens. But right now it did form a nice hammer candle. So this is looking like it could set up for an all-time high again, and then that would test that trend line 3 times. I would say, okay, that's a real trend line here. Let's pay attention to it. And then if it potentially cracks down, then we got to be worried. So we'll watch that trend line and see kind of how it plays out. And then we'll keep a close eye on the VXN, which is the NASDAQ vol. NASDAQ 100 vol, I believe. Yeah. SMH, so semiconductors, I've been talking, they're seeing some strength. Look at the weekly time frame. We gapped down, we moved up through halfway or more of this other previous candle. That's some bullish price action right there, which sets us up to potentially get back above the 5 EMA. I wouldn't be quite confident until we get above the previous weekly high candle and get above that 5 EMA. Then I'd be like, okay, there's no reason why we couldn't go test that 260 level again. But right now you can see it might be forming an ascending triangle as it's consolidating. So right now, as it stands, the only really bearish thing here is that we're below the 5 EMA, and then 2, the price percent oscillator is kind of losing gas. Oh, Lena. Here we go. INDU, Dow Jones Industrial Average. A couple just things to note here. Price percent oscillator looks like it wants to cross over. That would be a bearish sign. And then you can see that we're kind of like losing a little bit of steam here, but the bulls, so the bears had control throughout the week. They were at a low from they created a new low, okay? A lower low and a lower high. But the bulls did step right back up. It's kind of hard to see. So, it is what it is. But the 5 EMA, it stopped at 34183, and we closed at 34287. So despite being at a very red week, the bulls managed to get back above the 5 EMA. So it's in the bulls' favor. Shall in the bulls' favor. Now, the bearish thing is, if you look at the the transports, so, Dow theory here, this right here is the topping pattern, but it needs to be confirmed. So the low of this week on the transports was 15,317. If we start cracking below that, I'd be worried because this isn't, evening star type pattern right here. Where are we relative to the 5 EMA? The EMA is at 15,497. We closed at 15,475. So just below it. All right, price percent oscillator also looks like it wants to start crossing over to bearish. So we'll continue to monitor this little pattern. I wanted to call that out because if the transports start heading lower, chances are the industrials may as well. It makes sense. And then, like I said already, when we looked at the Dow Jones Composite from a relative standpoint, utilities, that risk off type move is really gaining some steam into that improving section. As you see, the industrials are starting to lag. And transports, as they have been leading, are starting to slowly move downward. All right, now let's look at some daily time frames. Dow Jones Industrials Average, we're right above the 20 period, a little bit of a shooting star type candle. I think monthly expirations ended just the other day, and that could have been why we've seen some sell-offs towards the end of the day on Friday. Don't quote me on that, but I'm pretty sure that's what was taking place. Overall context of this chart, still bullish, bulls favor, right? You look at the moving averages, that's one streaming river north. Price percent oscillator still losing steam, and we haven't really gone anywhere since, the beginning of April. Just a lot of up and down chop. Now, here is the IWM. The IWM looks like an advanced head and shoulder pattern. However, I want to also call out the possibility. Now, I'll walk you through this. Pretend this pink line is out of here, okay? And see this green line? If I would trace a green line from here to through there, it could potentially look like it's coiling up and consolidating to the point where if we do get a breakout, it's actually more of a pennant or, just a period of consolidation. But as it stands right now, we have not gone anywhere since basically 2021 start. You know, that's just the truth. Just by look at the right side of the candle, and you just take a look down to the left. We've just been in a monster chop sideways. All right, so we'll continue to monitor this, see where it goes. The last trading day, not the greatest, right? We are still below the 5, still below the 20, still below the 50. It looks like they're crossed over, and then the 100 period moving average, we're just slightly above that by $1. All right, and then we got Bitcoin. This is pretty interesting stuff too, right? Everyone's, you know, Bitcoin took a nosedive, as we've been kind of saying here when we were looking back here. Kind of talking about, okay, if it starts cracking through this, there's no reason why it can't very quickly go test the 200-day moving average. It quickly did, and it quickly went further. Now it's kind of just, you know, trying to put in these higher lows. It actually kind of looks like it's forming a pennant, which could be a bear pennant and potentially head lower. I'm not convinced that, you know, this is over yet, and I would imagine we'd have to get back above 45,000 and hold that, maybe even 50,000, to feel more confident of Bitcoin coming back. Because as it stands right now, I mean, you'd be gambling if you were just buying this right here, and you can get very lucky. But I think we're going to continue to see some sideways movement or some strong volatility in either direction with Bitcoin, because that was just a. First off, this right here is just a huge topping pattern in plain daylight. You can't escape that, and then we crack through a pretty massive area of support here, and that's gonna take some time to heal. Now, also to note, this little topping pattern looks very similar to the IWM, right? This arching pattern. You can see that big arching pattern taking place. So I've already pointed out on this show that Bitcoin has been a leading indicator for about 4 to 5 days, maybe a little bit more for the S&P 500. And we've been seeing when Bitcoin pulls back, all of a sudden, you know, 5 to 7 days or whatever, later you see the S&P 500 pull back. And now I'm looking at the IWM, I'm like, holy moly, what if it's also the same with the IWM, where, you know, 5 days, 7 days later, perhaps we see something very similar? It's a possibility, you know. There's a possibility. We got to keep an eye out for it. Now let's look at the Qs on the daily time frame. This is what I'm talking about, that monthly expiration. We gapped up. Look at, you know, when it's kind of like that, I can see people selling into strength as we crash right into the 20 period moving average. And we talked about that, right? It was a down sloping 20 period intermediate term to short term, right? Moving average, got right there, got rejected, closed back below the 50. We're right around the, you know, we're above the 5 and we're above the 100. So it's honestly, I don't see a great setup here. This could be potentially bear flagging, but we're not out of the woods yet, you know, at all. The Qs actually ended up down on the previous day, but like I said, not by much, right? So overall context of the chart, you know, the 200 still upsloping, the 100 still upsloping, and we have some just sideways chop. There's really nothing going on. That's why I personally haven't been trading pretty much at all, because it's hard to find direction. And then you look at the NYSE, a little bit of a shooting star type candle, still within this technical pattern, and all these moving averages look very similar to the industrials, just all sloping up very nicely. So we'll continue to see what develops here. Price percent oscillator still heading downwards. So momentum be slowing, yo. Daily time frame for the S&P 500, all the moving averages sloping up nicely, all stacked up. You can see the intermediate term moving average, the 20 period, it's more sideways, and we're still above the 5 period EMA, so we managed to get back above that, them bulls. So we'll continue to see here. Every time it comes around to the 50 period, seems like we just find some strength there. People are buying the dips. Now, if the dollar scenario that we talked about earlier plays out, that would put us down a little bit further, I would imagine, here in the S&P 500, which would be, like I said, the 100 period is right around just below 4,000 to 39.50. We'd have confluence of support there. We'd have that moving average. And then, like I said, that could very well potentially be just a very good opportunity to put us, you know, maybe at a short-term bottom or the bottom here in June, and then we have a massive summer rally. If we get a hit hard to the downside, that'd be pretty, you know, that would probably shake out probably shake out a lot of people and put a lot of fear in people's mind. You know, people that don't look at these charts, but that could set up for some just amazing opportunities too as well. I think that if we start getting above the high of this previous week, though, let me see where that was, 41.88, and we start, you know, a close above that, then it seems like the bullishness can continue probably pretty easily. So we'll see. Let's look at a couple commodities. Commodities have been losing a little bit of steam here. We talked about gold being kind of the risk off type move, and that's seeing some strength, but it's getting a little bit ahead of itself in my opinion. But CRB index also got ahead of itself, overbought. Now we're seeing it kind of slope down, still right around that 5 EMA. If we start moving down, I think 185 to 190 would be a good target to potentially see a continuation of that move. If we start cracking below that, this low, then I'd be a little bit worried. And then you look at oil, right? We called out this little ascending wedge. We did break down through that trend line, and then we immediately came back to back test it. So it's a bullish looking couple candles there, right? We had a red, then it looks like we gapped down a little bit, and then we closed above it. So that's a good sign for oil, but we need to see some continuation. If we don't get the continuation, I think its main target would be around this 54 to 56 range, maybe potentially a little bit higher where this 100-day moving average is as well. And then if you look at the daily time frame, you can see it's really struggling to get above that 67.50. You can see this weekly time frame. Did I say daily? I think I said weekly. I can't remember. This 2-year trend line breakout, which is a good sign, but it still hasn't actually shown a back test, and that's always a possibility too. So we'll monitor that. Silver is the last one I want to talk about, and silver, that's a pretty nasty looking candle right there. A lot of indecision. This could be a shooting star candle. We're above the 5 EMA, so it's still in the bull's direction. We're hidden in this resistance right up here at around 28.50 to 30, right? There's a thing fly, it's a zone, and then we have somewhat of a cupping pattern, so it looks good. Everything looks fine here. It's just a couple things that I've been saying, like for example, if you see the dollar start breaking out of that falling wedge, you might see a little bit more weakness and come down a little bit, but overall it's still in this period of consolidation, and it's struggling because it looks like there's a lot of supply in this 28 to 30 range. I think if we start breaking through that and we get a confident close above that, well, why couldn't we head higher? It would make sense. Price percent oscillator also crossing over. That's bullish. All right, everybody. That is all I have for you today. Heading into next week, it's going to be a cool week. I hope so. I hope everyone has a great weekend. That's all I got for you. See you later.